The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. This Monday morning live from Boca Raton, Florida. I'm going to be down in Florida all week. Remember, on Wednesday is the seminar in Naples, Florida. So make sure if you are in the South Florida area to come and join us on Wednesday in Naples. Meanwhile, this is April 15th, tax day. You know, my father used to call it April Fool's Day. And it's probably a good word for it. You know, we're all foolish enough to pay these confiscatory levels of taxes. What a way to ruin a beautiful spring day, people trying to figure out their income tax forms. But, you know, it's a very taxing day this morning for the precious metals bulls. And I don't want to spend the entire show today on the gold sell-off because there's a lot of other things I want to talk about. But I got to talk about what's in the news right now. Gold is down about $90 this morning. I did see it down about $100 at one point. That was before the U.S. market opened, but maybe a couple hours before, 2-3 hours before. But this right now is 6% decline on the day. Now, I just recorded another 20-minute video blog, which I put up on my YouTube channel on Saturday. So listen to that if you want a little bit more information on gold. Plus, I have got a new commentary that will be up on the Europe Pacific website later today with more analysis on what to make of the gold sell-off. But I will say this briefly. You know, I think Wall Street's brief love affair with gold is ending. You know, a lot of the mainstream guys got into the gold market in 2011, 2012. They watched gold go from 300 to 1900, and then they piled in, you know. And I think now they're giving up. And I don't think they ever really understood the fundamental case for gold. They just bought it because they finally noticed how much it had gone up, and they wanted a piece of the action. But for years, when gold was moving up to 300, 400, 500, 700, 800, 1,000, all they did was make fun of the people who were buying gold. But I guess by the time it really took out new highs, after the 2008 crisis when everything went down, including gold, but gold went down less than stocks, and then gold and silver made new highs. If you remember, silver got to $20 an ounce in '08 before the crash. That was the high, $20, and it went down to $8 and change in '08. And then it ran up to $50. So silver went way above what its pre-'08 crash was, long before the stock market got anywhere near its pre-collapse level. So I do think a lot of stock investors jumped in, came late to the party, and now they're rushing for the exits at the first sign of trouble because now, you know, the idea before was that, hey, you need gold because of the economy, because financial crisis, QE, the stock market's no good. Now that you have so many people convinced that the Fed has solved the problem, that stocks are the place to go, there's no reason to own gold, the Johnny-come-lately crowd that never really understood the fundamentals is getting out in a big way. And I think there are a lot of losses among the people who got in late, especially those who did it on leverage. A lot of people play the markets and the futures markets and the option markets. So obviously there's some heavy losses. Technically, there's a lot of stops being hit. Those are orders below the market that are triggered. People put orders in below key technical levels. I think 1,500 was a big technical level. We broke that. We hit a lot of stops. I mean, now we're down around 1,400 in the spot market for the price of gold. I do believe, though, that this is the capitulation of the decline that began from the peak of almost 1,900 in November 2011. I don't know where the bottom is. I do think we're probably going to make it here, whether it's today, tomorrow. I think there's a great buying opportunity for the metals markets. What's interesting about this sell-off compared to the last big sell-off, which was the 35% decline in '08, was that when the stock market, when the gold market went down big in '08, all asset classes went down big. Stocks were getting crushed. Gold actually held up better than other asset classes in '08. Of course, real estate prices were getting clobbered as well. So far, this is kind of limited to the gold market. Although oil's up down $2 today, back down to $89. But the stock market, the Dow is down almost 100 points right now. Obviously, this is really a gold sell-off. But the question is, will it stay a gold sell-off? I've got a pretty good feeling that this is going to bleed from the gold market into other markets. You know, the Hang Seng was down 316 last night. Nikkei down 209. I have a feeling that this isn't going to stay in the gold market, that we are going to see a correction now, a bigger correction in global equities, which ironically, or maybe ironically isn't the word, but that correction in the stock market, as we start to see some weakness in stocks, that might prove to be a catalyst to move money back in to the gold market. Because right now people are patting themselves on the back, we own stocks and, we're not losing any money. Because remember, when gold went down in 2008, it wasn't so bad for the people who own gold because, after all, their gold went down less than other people's stocks. I mean, they still didn't do as well as people who were in cash, but they did relatively better. And, of course, gold recouped its losses much quicker than did the stock market. But this time around, people are feeling pretty good about being in U.S. stocks, and the people who are in gold, now it's not. They're losing all by themselves. The misery isn't being shared in the general stock market. But I don't think it might not be too long before that happens, because this could be the beginning. It's like the gold market isn't in isolation. Maybe it's kind of like the first domino, but showing that how quickly markets can fall, how quickly sentiments can change when you have technically driven markets. And I think that the decline in gold in '08 was more of a fundamental decline because there was a broad scale decline in asset prices across the board. People were afraid legitimately of deflation. Banks were failing. Nobody really knew. I mean, I was pretty sure the Fed was going to just, crank up the printing presses. But a lot of people didn't believe that. There were people that were thinking that banks were going to fail and that this was going to be a real deflation like the 1930s. And so fundamentally, everybody's view changed, and they were selling everything. This is pure technicals, really, I think, in the gold market right now. It's a technically driven sell-off, but I think that you've got rallies in other sectors that made no sense fundamentally, that were technical in nature, and I think they could break down too. As quickly as people bought stocks, they can turn around and sell them. You have a lot of people too that have sold the Japanese yen. Who knows what's going to happen in the short run there? Japanese yen is rising today. I've also been looking at the yields on Japanese government bonds, which have been trending up now each day. They're up again overnight. That could be very problematic for global equity markets. So I don't think this is going to be confined to gold. I think a lot of the gold bears, who are on the major networks talking about, how gold's going down and how great the stock market is, I think, they're not really paying too much attention to the vulnerabilities in their own markets. Hey, we got a quick